Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what the big players in the market are doing, so hedge funds, institutions, and by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of monthly demand and support. From here, all these previous rejections to the upside were created. At the moment, the market is testing the exact same level, so there is definitely the possibility to see some bullish price action being created away from this zone. So the monthly time frame definitely seems quite bullish. We can also notice how we just had the creation of this M pattern, and in general, after the creation of an M pattern, what you could expect is a rejection to the upside, completing the M pattern at the neckline. So the previous support turned resistance from a monthly standpoint in this case. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice a very similar thing. In fact, we can notice how the market has created also here an M pattern, more precisely in overextended M pattern. And when you have an overextended M pattern, what you would expect in most cases is for the market to create a correction to the upside. So for the market to create some bullish price action in order to complete this pattern. So also here the weekly time frame seems quite bullish. We can also notice that if we look left, all this area has been acting as support for quite some time, with multiple rejections to the upside being created away from this exact same level. And as the market is testing the same zone once again, some bullish price action could be expected away from this area. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, we must identify this level here as quite important structure. In fact, this zone has been acting quite precisely as previous support, starting from here, again here, again here, again here, and just before the market broke it to the upside, once again the market respected the area, and then it got rejected to the downside. This would be the upside target in the case of a correction away from this level, because when you have such a precise area, the market is supposed to go and test the area to see what kind of liquidity it finds inside of the zone. Now, before we continue with analysis, first, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing on the AUD. Now, what we can notice here is that with the last reports, net positions once again have started getting slightly increased. The low here was at minus 107.5k net positions. Now we're sitting at minus 101k net positions. So institutions have started increasing their net positions, meaning moving back to the bullish side of AUDUSD, with 11,800 longs added just with the last report. And keep in mind that all currencies on the spot are traded against the USD. So if you're looking at the data for the AUD, actually already you're looking at AUDUSD. So what this means is that if we move back to the technical side, there is good probability to see more institutional longing inside of this area. We can also notice how we just had the creation of this double bottom at this zone. So inside of this area, there is the possibility to see some accumulation of longs and then a potential rejection to the upside away from the level. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this pattern at this structure level. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.